P.H. Ravikumar, the interim non-executive chairman of the company, that's SKS Microfinance, joins us on the phone line from Chennai. Mr. Ravikumar, how does this change the situation on the ground? The Andhra Act, Microfinance Act pretty much stays. So the situation in Andhra doesn't change at all despite this tweaking by the Reserve Bank?
Morning, Lata. It is a step forward. The notification of these guidelines actually, I think, sets the ground for possible repeal of the AP Act, which is what the sector is hoping. In fact, you are aware that the central MFI Act was to be introduced in the winter session this time, but this could not be done. But this sets the stage for proving that the AP Act is redundant, because all the... But
Mr. Ravikumar, I spoke to the Reserve Bank and they are pretty much clear that they are the regulator and that the Andhra Pradesh government as the sovereign body has every right to have the law it has. If at all it has to be repealed, it has to be repealed by the Central Act. And the Centre at the moment I don't think is looking at the MFI Act as one of its priorities.
Actually, it was slated to be introduced in the, if I can correct you, in the winter session, but we are hoping, because the draft has already been cleared, and definitely the budget session we hope it gets introduced. There are two ways of repealing the AP Act, which the AP Assembly itself does or the Centre does it. In either case, I think you would concede there is no need for duality of regulation.
Okay. So at the moment, you still will have to file all your new loan requests with the district authorities in Andhra?
Yes, 100%.
Okay. You have to announce a new business model on Wednesday, if we understand it correctly, Mr. Ravikumar. What's the objective in mind while you frame a new business model?
Actually, I'm not sure that there was anything slated to be announced on Wednesday, but in any case, the broad contours we have shared with you all, in the sense that we are enlarging the scope of operations of the company to cover all financial sector elements that are needed in financial inclusion. These would include thrift, these would include risk coverage, that is life insurance and other insurance coverages for and the payment products.
Okay, so many of your peers, I believe, are looking to cater to about 50,000 and 5 lakhs, while you as an MFI can't do that. Is there any possibility of a scale up by starting another arm which could cater to that segment of borrowers?
It's premature to speak that we would set up anything, because the board is examining the opportunities available and what are the current regulatory requirements as legal requirements. You are also aware that the Reserve Bank of India is not comfortable with too many subsidiaries, because on a policy front, you are aware banks have been asking for subsidiaries to do other activities and RBI has not been comfortable. So we are not sure what is the stance regulators will take. But clearly financial inclusion is a policy trust, and that trust should warrant a difference in approach if that is the legal requirement and the regulatory requirement.
You said thrift. By that you mean you will collect deposits?
At this stage we are not permitted, but if we can convince regulators and the policymakers that a structure exists which takes care of the concerns of the regulators and the person in general, that the savers' interests are not jeopardized. It is at that stage that the collection of deposits would be permitted. The draft MFI bill, which is to be introduced in the Parliament, covers it.
Okay. Well, the Reserve Bank has been long opposed to it, Mr. Ravikumar. They have been insisting on that minimum net worth.
We are aware.
Okay, no, let me come to the other issue. The other issue of risk coverage and other elements that you want to offer. It is only the microfinance institutions that are getting priority sector status as of now. If you did other NBFC activities, you will not be able to get your loans described as priority sector, and they may therefore become a little more expensive, wouldn't they?
Yes, there are two aspects to these issues. One is banks which want to fund us because our funding is deployed in what are called as priority sector advances is one. The second is funding which is transparently disclosed to the lending banks are for a segment which is outside the ambit of the definition of priority sectors as defined by regulators, and if they still want to lend us, on that basis we would look at it. But clearly, if you look at the income criteria, whether it is 60,000 and below, and somebody has 75,000, not 60,000, marginally on the other side, as a microfinance institution, regulations will not permit us, but as economic activity and profitable economic activity, somebody needs to step in and fund them.
The CFO is being quoted in the print media saying that foreign investors have actually evinced interest in the QIP issue, Mr. Ravikumar. What's the quantum we are talking about? Could they lap up the entire issue if required?
See, the board has cleared an issue of 900 crores, and you are aware the international investors, the December middle to first week of January is a virtually period of holiday, their year end. But yes, preliminary there has been a positive response.
Okay. How much of the Andhra loans have been written off, and how much is on your books as bad loans?
See, the total portfolio which is to be provided, we have already provided 70%, and therefore if you look at the provisioning norms which have been announced in the new guidelines released last week, we don't think it makes any material impact on us, because we were well on road to covering that. The balance 30% we are sure will be the next 2 quarters covered.
Oh, but if, would you have the amount off the cuff? What is the amount of non-written off or bad loans?
It will be around 300 crores.
Okay. And if that is written off, that might affect your capital?
No. Post write-off also we need well above the 15% capital adequacy. So capital adequacy has never been an issue for SKS. But clearly what happens is the funding cost of the portfolio, which is provided for and does not generate an income, is something we will need to address, and the QIP is seeking to address that.
You don't have a game plan where your dependence on Andhra is reduced to practically nothing?
See, already we were not fully dependent on Andhra. At the time of the crisis developed because of the passage of the Act, our portfolio was 28%.
Yes, and how much is it now?
The portfolio has shrunk, so therefore the percentage would increase, because you are aware in the last 1 year we are probably the only company to whom banks lend continuously. But we need to manage the liquidity and our payment obligations. So today the proportion would be in the mid-30s on a shrunk book, but we are growing the book again. So it will go down.
So absolutely on that point, Mr. Ravikumar, your loan book has shrunk quite considerably. What's the expectation on that front? Do you expect to expand it in the next 2 or 3 quarters?
Yes, because once we have the QIP in, the burden of the funding cost goes, and we also have liquidity to grow our book. Precisely what the QIP is seeking to address.
All right, Mr. Ravikumar, we'll leave it at that. Thank you very much for joining us with those details.